Nobody trusts the West. Yes, it's manipulated. No, even if they wanted to, they couldn't stop it. So you as an investor have to look at that and say, what does that mean for me? Well, I think if you look at macroeconomics, it means higher prices, not lower. And if you look at supply and demand, it means higher prices, not lower. And that's what I expect to happen. The Shanghai has challenged the West. LBMA challenged Dubai and lost. Dubai basically gave them the middle finger and said, we don't care what you want, we're not adhering to LBMA. And now you got Russia doing it. The BRICS nations are rising. They're going to take over these pricing markets. And when that happens, I don't know if we'll get true price discovery. Who says they won't manipulate it? But at least we'll have different viewpoints on it.
Hello everyone and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and before I announce my guest, just a reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products or services. Always do your due diligence and consult with your financial advisor. My guest today is Robert Kientz, a well-known figure in the precious metals investment space with over 20 years of experience in finance, bonds, stocks, real estate, commodities, forex, and precious metals markets, of course. Rob, thank you very much for joining me today. Welcome back.
Absolutely. Thank you.
Rob, given your extensive experience in precious metals market and your focus on the long-term investment cycles, what are your expectations for gold's performance in the remainder of 2025? I mean, specifically, how do you see the macroeconomic factors like inflation, central banks' policies, or geopolitical tensions influencing gold prices?
Yeah, it's interesting you ask that question, and I'll lead with a JP Morgan estimate, and then I'll give mine. JP Morgan thinks that gold could hit 36.75 by the fourth quarter, and mid next year, almost a year from now, about $4,000. They're looking at the same thing, geopolitical tensions, gold trade, that type of thing. The sky's really the limit. I just got through doing a video where I was looking at the move in 2009 to 2011 compared with today. And in terms of percentage and dollar terms and those types of things, the move that we've had since the beginning of 2024, about 18 months, has been the same size, actually a little bit more aggressive, even though they're overall same size, as the move we had in 2009, 2011. And not only that, it's broken out. So gold is broken out of every single indicator. There are none left. And so it can run as far as it wants to run. Silver started to make that move. I'll talk about it for just a second, then we'll get into the macro. Silver started to move a little bit, and that's typical. Silver will come after gold. Gold had a massive run up. Silver had to move, and it did. And it's getting close to 40. As silver pops at 40, I expect a lot of resistance in the medium term. It may be 3 to 4 months. I don't know. But then silver will continue to go if gold goes. So silver's going to go. It's probably going to somewhere around 39 to 41. It's going to sit and wait on gold. And if gold is moving, silver will keep going. Now, what would cause gold to move? What's causing gold to move? Well, I just did a video on Russia. Let's talk about Russia for a second. Russia is the second largest gold producer in the world. They have $13 billion that they produce yearly, or basically their market, right? And like China, they're starting to nationalize. They just nationalized their third largest mine. They're building a second exchange in Russia. They have the Moscow exchange, which is typically heavily physically traded, and it tends to be more internal, though it can do some international. But the one that they're going to do in St. Petersburg is internationally focused. And specifically, the Russians said this is to challenge the LBMA. And by extension, I'm going to say COMEX, because the LBMA in the UK and in London and the COMEX here in the United States together collaboratively have set the pricing and the trade market and the functionality of that industrial trade market, for a long, long time. And now Russia is challenging that. First China with the Shanghai, and now Russia is challenging that. Why are they doing it? Well, in the articles that I quoted, Russia is saying they don't trust pricing in the West. Since the sanctions were put on Russia in 2022, they've largely 90% of their trade now comes in local currencies within the BRICS, whether it's the yuan, the ruble, or whatever the case may be, the Indian rupee, the South African currency, whichever one. And they're not doing it in dollars anymore. And according to Russia in these articles and the World Gold Council in a survey that just came out, All the central banks in the world are saying they're de-dollarizing. And 2 months ago, for the first time that I've ever seen this statistic come about, that I've been following it, and I think it goes back at least 30 years, if not to 1971, the world held less than 50% of their international reserves in dollars, less than 50%. De-dollarization is here. Why does that matter? Because when dollars aren't going towards trade, the dollar strength wanes. Okay, now Trump may like that because it may make our exports more attractive as the dollar falls, but you run the risk of crashing the treasury market, which is not really going to be good for anybody. But I think the rest of the world has sat here and looked at the problems with the U.S. currency, the problem with the U.S. fiscal situation. If you look at the big, beautiful bill, we're increasing spending before we're reducing it by $2.5 trillion. Does that make sense? So what are we going to go to 40 trillion in debt, and the worst debt load in the history of any nation on planet Earth? Yeah, I think the writing's on the wall. I think the world is looking at currency issues first and foremost and saying, forget this. First of all, they don't want to go into the stablecoin system that the U.S. is pimping to support their treasury market in the dollar. They like their CBDCs, but for their internal trade, they like their local currencies and they like gold, and that's why they're doing it. So you're seeing the culmination in the next stage, I would say the next to last stage of the gold market moving west to east. The last stage will be when the East categorically and publicly takes over gold pricing, and trade, which they will. That it's headed that way. Pandora's box open. You can't stop it at this point. Now, macroeconomically, what supports this? Well, you have massive problems around the world. We've got two major wars going on. We've got jawboning between China saying they want Taiwan. We have North Korea agitating. We have all sorts of stuff around the world. You got the European Union apparently wants to blow itself up. First, it wants to get rid of oil and kill its own energy industry and then become more dependent on Russia. How does that make sense? You're trying energy independence and you go renewables, it doesn't work. So now you're on natural gas, which goes through Georgia and it's Russian. And I'm like, why didn't you just keep your, the Western nations are self-destructing. They're making horrible moves as their economies collapse, as production and trade collapses, and now they're making currency mistakes. And the rest of the world's looking at this saying, get out of the system. The West is blowing up, okay? And the East is simply getting out of the system. And gold is reflecting that uncertainty in the trade and the currency markets around the world.
Yeah, Rob, spot on. The world is very complex right now. Actually, it has been, but nevertheless, we are living in this world right now. Let me just quick return to COMEX. Of course, there is ongoing skepticism about the accuracy of COMEX gold and silver inventories, with some analysts questioning whether reported stocks are fully backed by physical metal, and as we know all that. What is your take on the on the source of that, of the COMEX data in this year, and could this really trigger a market shock?
Wow, it's very interesting you asked that question. I was just having this conversation with a friend the other day when I was traveling, because it was actually a congressman who was asking me about the gold markets, and he's like, "Are the prices accurate?" Because these congressmen, as we go to push these gold legal tender laws in the States, they're hip to the game. And they know that there have been whispers about the gold pricing. And they're like, is it reliable? Because they want to know if they're going to pass this legislation, is it going to be based on reliable pricing? So I had this conversation with him. It was from Arkansas. It was the state senator. And it's interesting. If you just look at my interviews and my friends' interviews. A few years ago, my friend Chris Marcus of Arcadia Economics interviewed Bart Chilton, who was the CFTC commissioner, or had just recently been the CFTC commissioner, and he said he knew that the silver price was manipulated. For all intents and purposes, I'm summarizing, but if you watch the video, he says, yeah, we know it's manipulated, we can't stop it. I talked with another former COMEX head, and I'm not going to say who it is, but it was in the 80s, and they led me to believe that the commodities markets had always been manipulated, which I have data on that, and I'll share it in a moment. Research. And he said they had always been manipulated and you just understood that was part of it. In other words, you just accept it. And I said, why? And he said, well, we really haven't had the legislation to enable the CFTC. And you could say that's him deflecting responsibility, but then let's go to the facts. Jerry Markham, a professor, I believe at FIU for a long time. He's a lawyer by trade, but he writes a lot on commodities. Very intelligent guy. Has a whole published bibliography and pedagogy on commodities, and he's done studies for hundreds of years. And he came out with a paper called, I think it was called Commodities Markets, the Unprosecutable Crime, I think. But you can go look him up, Jerry Markham, Markham, FIU University, Commodities Markets. You'll find this study. And in this study, one of his many, he goes on to point that the commodities markets have always been manipulated, and every single piece of legislation that's ever been passed has been as a result of stopping that manipulation. And he says it's unprosecutable because they don't have the teeth. Well, what did that previous CFTC commissioner tell me? It's unprosecutable because they don't have the teeth. So the system is not set up to prosecute this, but is it? Well, let's take it a step further. About 3 years ago at Silver Symposium in Coeur d'Alene, Idaho, my friend Rob runs that conference. I was supposed to do an interview. I facilitate a lot of interviews. It's supposed to be a mining stock interview. It's supposed to be 4 mining stock CEOs that walk right up next to me, and we have it and we record it. We do it in front of the audience, a live audience at this very popular conference on precious metals. They didn't show up. And I'm looking around, and nobody's walking in the room. Like, am I interviewing somebody? I think that somebody at the conference, I don't know, set this up to where I was interviewing somebody else, and they didn't tell me. And they wanted it to be raw and real, and they wanted me to do the interview because I've talked about manipulation. I wrote an article on it at Seeking Alpha back in 2010, and it was one of the first mainstream articles. I've been following this for about 16 years. I talked with the lead investigator at the CFTC. He had been with them for 30-something years, and he had just retired about a year before we did the interview. He ran the investigations department across every single commodity product traded, not just gold, silver. And he told me, he says, we built this massive database. And I say, great, what do you do with it? And he says, well, we have to go hunt it down because it can't be completely automated. AI is not quite there yet. Plus, the stupid standard that the United States government has is you have to prove intent. So I can see in the data where the price is manipulated, but if you can't prove at the time that that trader push the button that in their mind they had the intent to defraud, you can't prosecute. Now, what criminal is going to go and admit to you in their mind that they had the intent to defraud? I don't know, maybe 0%. No standard exists anywhere in the United States with any other crime that I could find where you have to prove intent of somebody's mind when they pressed a button. And it went further, and I said, great. Well, let's say you look at the data and you can build a case that you think there's manipulation based on the preponderance of the data, and at least do an investigation and make a case. He said, well, Rob, we have over 1,000 products on this exchange, and I would need 1,000 investigators, one for each product, because you take the data, then you have to manually go through it and build your investigation. Systems aren't built yet to do that all automated. And I used to be a cyber investigator and auditor. I did it for 20 years, and he's right. You can't do all automated investigation. It doesn't work. You need people. Guess how many he had? 12. He had 1.2% of the people he would need to investigate these markets. So guess what's not being done? And wait, there's more. In a news release a couple of years ago from the CME Group and the CFTC, there was a cyber attack and some of the markets got shut down, the commodities markets on the CME exchange. And they issued a press release. And the press release stated that they were having to collect data from the traders to rebuild the market. And I thought, wait a minute. The CFTC, the regulatory body, and the CME Group who runs the exchange don't have all the data. And so I emailed, I think it was the CFTC, I believe, I have to go back and look. The response I got back was, well, yeah, and it was, the response was back on a memo. They didn't respond to me, but they put a memo because of my question, because I'll ask them questions and they'll issue a memo, and like 2 days later is a memo. And the memo basically stated, no, we don't have all the source data. So the traders are giving the data to the regulator. That's the fox watching the hen house. So in every possible instance along the way, ineffective regulation, no ability to actually monitor trades, and they don't even have access to all the data, and they don't know the data they're getting hasn't been, fiddled with. This is the dumbest setup you could possibly make. They don't have a chance. Even if all the people at the CFTC wanted to do this, they couldn't with the resources in the setup. It just doesn't work. So is it manipulated? Yeah, of course it is. And in the story I did, which a video will come out in 2 days, Russia, the second largest producer of gold, nationalized their third largest mine. And in press releases, their politicians are saying they don't trust the West. So they're building a new, exchange in St. Petersburg because of that. Nobody trusts the West. Yes, it's manipulated. No, even if they wanted to, they couldn't stop it. So you as an investor have to look at that and say, what does that mean for me? Well, I think if you look at macroeconomics, it means higher prices, not lower. And if you look at supply and demand, it means higher prices, not lower. And that's what I expect to happen. The Shanghai has challenged the West. LBMA challenged Dubai and lost. Dubai basically gave them the middle finger and said, we don't care what you want. We're not adhering to LBMA. And now you got Russia doing it. The BRICS nations are rising. They're going to take over these pricing markets. And when that happens, I don't know if we'll get true price discovery. Who says they won't manipulate it? But at least we'll have different viewpoints on it. And at least at that point, you can make an intelligent decision based on international trade. Are the markets manipulated? Are they fairly priced? And I think given, all the things that I've looked at over the years as a former investigator, investigating the investigators, no, it's not fairly priced. It's manipulated. I don't care what anybody says. I've done enough work. You're unless you can show me every piece of data for the last 20 years, you're not going to convince me. I've got the evidence, right? So.
Yeah, great overview, Rob. When we talk gold, we always have to mention central banks. Of course, central banks have continued aggressively gold purchases into 2025. Countries like China, India leading the charge, but not just those two. We have Poland, we have Kazakhstan, we have a lot of those, let's call them Eastern countries. What do you think? What's really driving this sustained demand, and how might this reshape global gold pricing in the coming years?
It's going to reshape it, and I would say that Kazakhstan has refineries. Other countries have built refineries, so they have refining capacity. And the overall move is for local gold production. So again, in the video I just did, not only Russia, but a lot of countries are now buying domestically produced. They're not going to COMEX or LBMA. One, because pricing, and two, because there are rumored shortages. And we saw earlier this year with a rumored shortage on the LBMA and what that did to the price and how they panicked, with silver, for example. And we've seen where cash settlement occurs on the COMEX and you don't get the bars even if you want them. Why not? If it's robust with all that gold and silver, who cares? If they're going to want it and use it, take the money and run. What do you care, right? But they're not wanting to deliver it. And you've seen other countries repatriating like Germany and India and those guys, away from the Western gold reserves. But really what the articles are stating is that people want locally produced and they want to refine it themselves and they want to handle it themselves. It's a lack of trust and availability. Okay, those are the issues right now. And that hasn't reached the general public. I mean, I know because I'm a data head and I read all these stories and I have readers that will just send me tons of stories. And they're all, reputable stuff. It's not blogs. This is from, Russia Times and South Morning China Post and that kind of thing. So we know, yes.
Sorry, Rob, when you say general public, the spot on, how should investors navigate this disconnect between physical and paper prices?
Okay, so in gold and silver, the prices jump when generalists get in. Now it's already jumped. I mean, it's doubled in 18 months in gold, and silver's had a nice run from about 18 to almost 40 here the last 2-ish years. So what we're looking at is increased prices before the public gets in, especially the U.S. public. The U.S. public right now, I sell retail through my company, and I know a lot of wholesalers, and I see prices every day. I see retail, I see wholesale. I'm telling you that the premiums have not blown out. If the premiums have not blown out on American Eagles and common bullion products in the United States, the American public is not buying because the supply chain is so thin. And as soon as you start to see aggregated demand with the U.S. public, you'll see those spreads widen, okay? And you'll see it filter to the international markets as well, where people will not sell at the stated price. And so we haven't seen that yet, but it's estimated that if every person bought 1 ounce of silver in the United States, before every person had an ounce of silver, you've just bankrupted the entire world supply of free-floating silver. There are also articles coming out from David Jansen and others who follow the international markets that London is almost out of free-float silver. What is free-float silver? Well, London market is this really opaque market in which you have maybe 1,000 claims for an ounce of silver, but you only have 200 ounces of silver. And what they do is they don't deliver to everybody. They say, oh, just have your position and have the exposure to the price. And if we need to, we'll get you the silver. So they have less than they want, and it's a Ponzi. And the Ponzi's only get called when everybody goes to the bank and they want all their money at once. What was it? It's a Wonderful Life, right? The old movie, the old Christmas Eve movie. People go to the savings and loan, they take their money out, and he has $2 left. But if people had taken their entire accounts out, he'd be out of business. It's a run. And what we're seeing is not a run on the bank. We're seeing a run on the gold and silver, especially silver, but it's coming for the gold. And you can clearly see that any incremental increase due to a world panic is going to destroy the current prices. In fact, I think the next time America gets in the West decides to buy physical, we're going to run out of silver very quickly, and the gold prices are going to go nuts. And at some point, I expect both to stop trading on the Western exchange, at least the COMEX. I don't know about London, but I can speak for the COMEX. I follow that very closely. They're going to stop it. It's going to be a bank run. They're going to have a bank holiday, and they're going to shut it down. And that's coming. And I don't know when it comes, but we're so thin on silver. Literally anything that tips silver up, industrial or investment grade demand, is going to bankrupt that market almost overnight. And we're sitting right on top of that. And we've been talking about it for years, but we've had 4, now we're going to year 5 of not enough mine supply to meet demand. We've had India say we're buying tons. We've had Russia just announce that they're adding silver as a reserve asset for the first time in history. Yeah, people know the game. They know the shortages are there. It's musical chairs for the gold and silver for the states. Now we'll see what happens if we get musical chairs for the gold and silver for the people.
Yeah. Rob, what about Fort Knox? What's your take? Do you really believe that the U.S. gold reserves are as reported, and or they are not? And how might uncertainty about Fort Knox impact investor confidence in gold as a safe haven?
There's officially been uncertainty about the gold in Fort Knox and like the gold held under, in New York. There's a couple of places they hold the gold, right? Fort Knox is the famous one. I think the Fed building in New York also holds a bunch in the basement. And you've had statesmen go over there from time to time and say the gold's here. The problem is the rumors are that not all the gold's there, that the gold is not LBMA quality, i.e. it's not the original gold, it's lesser quality, and that it's been rehypothecated. In other words, it has more than one claim on it. And when Trump called for, we're going to audit the gold, audit the gold, audit the gold. Besant, Secretary Treasury, right, went and he said, oh, the gold's there. And then all the talk about gold audits ceased. And we haven't had a real public gold audit in 70 years. I don't know. I mean, come on. If the gold's there, just say you have it. It's not like it's going to hurt you if you have it all. It's probably just going to say, okay, the U.S. government's actually done something fiscally responsible. It's going to help. It would help the dollar. For them ducking the question just creates all this speculation, and the fact that they said we're going to audit and they won't for 70 years, and you have Trump come out and demand an audit, and then his Treasury Secretary come out and say, well, we don't need one. I think they're trying to hide from the public how dire that situation is, and we're not going to know until you do a public audit. And I want a third-party firm. I want one of these big 4 companies or Bureau of Veritas or somebody like that to roll up in there and do, a good real audit, and then put the bar numbers public, and then take a bunch of pictures. And then just end the stupid debate already. I don't know why this needs to rage for another 70 years. Just audit the gold. Audit it.
Yeah, people are skeptic when they don't get the answers they want to hear, of course. Rob, what about gold in a market, in a potential market meltdown? Let's say in 2026 we have market crash driven by factors like, debt defaults, equity sell-offs. How do you expect gold to perform compared to other assets like stocks or bonds in those kind of circumstances?
Historically, when we stopped using gold as money in 1971, and we didn't even allow people to own it or trade it for a few years after that. Actually before that, we had banned, gold ownership dating back to like the Gold Act and the illegal unconstitutional confiscation order from the president in 1933. And then they repriced it and basically stole from the American citizens. So let's call it what it is. They stole from them. Essentially, gold's not been a mainstream asset or money. And most financial brokers don't make money off of physical. They'll say the ETF a lot of time aren't redeemable. So you get price exposure, but it's a piece of paper, right? It's an IOU. You're never going to get the gold. So Americans haven't been big gold investors. And so gold becomes counter-cyclical, meaning gold goes up when bad stuff is happening in the economy. Well, gold's doubled in 18 months. That should tell you all you need to know about it. For the first time ever on the price gold chart in the United States. First time ever. And it did it in half the time it took 2009 to 11 when we had a declared recession. We're not even in a declared recession, and gold is doubled. Come on. Gold, the world knows what's going on. Give me a freaking break. Now, the typical pattern is when we go to recession, gold comes off. Why does gold come off? Because the pricing is done on the derivatives, not the physical. It's not that people aren't buying physical. They're going to the counter at their local coin dealer, going to APMEX or wherever, in my company, and and they're buying the gold. But the derivatives they sell, why? Because they need liquidity, because they're going to get margin call, because it's a leveraged investment. So gold and silver go down for a month or two, and then everything else keeps crediting, and then gold, and then once people have gotten out of their derivative investments, then it goes right back up. Why? Because they want to make money on the jig, right? They want to make money on the trade. So that's been the pattern. I think that's probably what's going to happen again. The only thing that would change it is if the U.S. government came out and put actual restrictions on it. Now, Turkey's put export restrictions not only in gold and silver, but a lot of commodities. A lot of the BRICS nations are starting to do these capital controls. Why do you do capital controls? Because of problems in the economy, trade imbalances, and as the U.S. tries to beat up the rest of the world with tariffs, there's going to be more. And the question is, will they do it in the U.S.? If the U.S. dollar starts to fail and the Treasury market starts to fail, you better bet there's going to be capital controls. They already have controls, and when you leave the country and renounce your citizenship, they want all your money. If I go earn $1 in Panama or New Zealand, they want your money, even though I'm not earning it here. The U.S. government thinks they're entitled to the entire world, I think. They've already got some capital controls, but wait until they start saying, well, we're going to have a bank holiday. You have to go to stable coins. You can't use cash anymore, and gold's illegal to own. And if you don't already have it, you're pretty much screwed at that point. So that happens when bad stuff happens in the economy, especially you go through a currency reset, which we're about to, out of the dollar into stable coins and CBDCs, the new electronic fiat. And yes, that's going to explode gold. Of course it's going to explode gold. But the pattern is, goes down first, traders get out of their positions, and then it runs. Where it runs to, I'll quote Mike Maloney from Gold Silver on that, unobtainium, meaning not at any US dollar price. And that's when the US dollar will reach its intrinsic value of zero, and gold and silver will reach their intrinsic value of being money. And everything won't be priced in dollars or rubles or yuan, it'll be priced in gold.
Yeah, Rob, final question, more of a hypothetical question. I will need your crystal ball. Let's say we are in July of 2027. What price range of gold and silver are you predicting?
Silver 250, I put gold at least 5,000. Now, that's because I think that the world's going to continue to de-dollarize. I don't think, and I used to think about 2025, 2026, the currency below. I think we've got a few more years because they brought in stable coins. Stable coins is sort of a new invention. And what they're really trying to do is they're trying to say, okay, we have this asset over here. Let's monetize it and take the dollars and keep the treasury market going. It's basically stealing wealth, essentially, because eventually when you're not going to get the money back. Okay, when you leverage a physical asset and create a piece of paper, and you take that paper and you pump up another paper market, and eventually that paper market gets destroyed, you still have the physical asset, but guess what? Because you took a loan on it, you don't own it. So it's not going to come save us. So if that process continues, as I think, the currency may take a couple of years to blow, and you'll just get this nice steady increase in gold and silver. The silver, I went much higher in price relative to today's price, a factor of about 5, because I think the industrial shortages are going to hit silver, plus investor demand. Because if you go look at a piece of gold, and you're looking at $3,500 gold, and by this time next year, JP Morgan said gold's going to be $4,000. The average Joe can't afford a tenth of an ounce, much less an ounce. You can go to silver at $250, and you can get a valuable asset. So I think silver has more price elasticity because of that than gold the next couple of years. And when you add in the mine supply shortages and the nationalization going on silver very quietly around the world that nobody's paying attention to, I think silver pops harder. I don't know if in 2 years you have the big one. We're going to have to watch currency and the stablecoin markets for that. But that big one's coming regardless. Even if you put stablecoins out right now, that thing collapses. It's just not ready. So, I think in 2 years, much higher prices. In 5, who knows where the prices are. You're going to be pricing it in something other than dollars in 5 years, I have a feeling.
All good points. Rob, where can people follow you or connect with you?
Absolutely. So you can find me at the Freedom Report on both Twitter and YouTube. I also, bi-monthly, have a video on the Kinesis Live from the Vault channel. And you can just follow me at a state near you that's passing gold legal tender laws, because I'm a board member of Citizens for Sound Money. We got Texas, Florida, and Missouri passed this year, and we're going to do more. So stay tuned for more legislative news on citizensforsoundmoney.com.
Rob, thank you very much for this.
I'm sorry, .org.
Yeah,
Apologies.
I really enjoyed it. Thank you very much.
Thank you, sir. Appreciate you having me on the program.